What's up, guys? This is Lucas from IntraAlpha. In today's video, we're going to be breaking down exactly why selling options is much better than buying them. If you struggle to be profitable in your options trades, then this video is for you. The first reason why selling is better than buying is that when you're selling options, you get paid up front. Whatever your max gain is that you have on your trade, you're going to get all that money today. You can reinvest that money, you can use it to hedge your position, or you can simply cash it out of your account. You're not waiting to close the trade to get paid. You're actually getting paid the moment that your first trade, your entry trade, fills. The second reason is that option selling represents the null hypothesis. We actually don't need to make a prediction. We don't need the stock to go anywhere in any magnitude or at any time. What we need is actually nothing to happen. When you sell an option, you're basically saying, I will take everything besides the premise that the option buyer is making. An option buyer needs the stock to move in a certain direction, in a certain magnitude, by a certain date. And an option seller actually needs none of those things. If any one of those three things, time, direction, and magnitude, don't come to pass, the option seller is going to make a profit. The option buyer has a thesis, a premise. They think they know where the market is going, and the option seller simply takes the other side of that trade. The third reason is that option sellers can be profitable in all three market directions. If you sell a call and the underlying moves up, you can still make money so long as it doesn't move past your sold strike. If the market moves sideways and your strike expires out of the money, you're going to achieve max profit. If the underlying moves down, you're definitely going to achieve max profit, and it's going to happen very quickly. Option buyers need the market to move in their direction during the time period that they specified and in the magnitude that they need in order to hit profit. As an option seller, none of those things need to happen, and you can be profitable even if the market moves against you. The fourth reason is that option sellers make money with every passing moment of time. If you sell an option, a call, or a put that's out of the money, then that option is going to erode at the daily theta value. So if theta is 10, that means every single day that you hold that short option, you're going to get paid roughly $10. That means that option sellers get paid to wait, whereas option buyers actually need to pay to hope. The fifth reason is that because time is on your side, there really is no sense of urgency. You're being paid to wait. This allows you to be much more patient. You don't need to watch futures. You don't need to catch the market open. You can rest assured knowing that time is on your side, theta is at your back, and as time progresses, you're getting paid for each and every moment. This does not apply to option buyers who need something to happen, and they need that something to happen quickly. That's going to lead to urgent, frantic decisions where you have to market order in or market order out just so that you can time the market perfectly. As an option seller, you have the luxury of being far more patient and waiting for the market to come to you because you're getting paid to wait. Number 6, option sellers get to define their risk and their reward in advance before the trade even gets put on. You don't have to wonder how much you could lose or how much you can make. You already know in advance when you put on a defined risk short options trade. You know exactly how much you're going to get paid. You get paid all that money up front, and you know that if the trade goes against you, you're not going to lose any more than your max loss on that potential position. Option buyers do not have that luxury. If you buy a call, you do not know how much that call is going to be worth, and if the market moves against you, you don't know how much you're going to lose until it's already too late. Option sellers are not subject to that level of uncertainty because they've defined their risk and their reward in advance before the trade even gets put on. You don't need to panic. You don't need to worry about it. You can just sit back and relax and let the market do what it's going to do. Reason number 7 is that nobody knows the future direction of the market. Anybody who tells you they know where the market is going is lying. As an option seller, you still don't know where the market's going, but you do know exactly where this trade is going to go. You know what the max profit's going to be, as well as the max loss, and you can use an option profit calculator or a Monte Carlo test to find out exactly what your option will be worth in a variety of market situations. Knowing this future outcome in advance allows you to be much more patient, have much more rational and calm decision making, and not be panicked to push you into doing something that you weren't prepared to do. You can get better entries and better exits because you've eliminated a whole bunch of uncertainty by knowing what your risk and reward is in advance. Reason number 8 is that option selling works in all markets: bear markets, bull markets, stagnant sideways markets. There is a unique and customized option selling strategy that works very well in that environment. That does not hold true for option buying, nor does it work for equities. If you're long equities, you really can't make money in a bear market. You can hedge your positions, you can move into cash, but there's no real way to profit off a bear market unless you're willing to go short. As an option seller, you have plenty of opportunities to make money in a bear market with selling call spreads or putting on other ratio spreads, calendar spreads, or advanced option selling techniques to capitalize on a bear market environment. If the market is extremely bullish, you can always sell puts. If you believe the market's bearish, you can sell calls. And if you think we're going sideways, you can sell iron condors and trade a sideways market quite profitably. The best case scenario is that implied volatility, or the VIX, is extremely high, and that makes almost all option selling strategies even more profitable. It really doesn't matter what type of market you're in, there is a best fit option selling strategy that works in that environment. Reason number 9 probably should have been higher up on this list. Option selling drives real income. What people don't really realize is that if you buy and sell equities, you are experiencing capital gains. You need the stock to move up in order to sell that position so that you can cash that money out of your account. With option selling, you get paid real cash income immediately as soon as that trade fills. Now, there is no free lunch. It is not risk-free, but the point is selling options is an income generating strategy. Reason number 10 is that option selling can supplement other investment strategies. If you're a buy and hold equity investor, that's great. It's a wonderful strategy, and it's very hard to beat the market with anything besides the buy and hold strategy. But you can add to those gains if you're able to sell calls against those long equities. If you want to short the market, you can sell puts against those short positions so that you can generate real cash as those shorts work in your favor. Reason number 11 is that if you want to enter an equity position, you can use option selling to lower your cost basis. If you like a stock that's currently trading at 100, but you're only a buyer at 90, you can use a cash secured put and sell the 90 strike put on that stock forever. You can generate income on that stock each and every time that the market stays above that 90 strike. But if the stock falls below that 90 strike and you get put or assigned those shares, well, then you were paid to wait and you picked up the equity that you were happy to own at 90. Reason number 12 is that selling options really isn't that complicated. Yes, it might sound mysterious and there's a lot of new words to learn, but once you get the hang of it, selling options actually becomes quite easy, and if you ask me, it's a pretty fun game to be playing. It's a lot more interesting than buying value stocks and holding for 10, 15, 20 years. That might be a great strategy and it has worked over the years, but it's not very active and you don't have much control over your outcome. As an option seller, you can define these strategies, learn these skills, and essentially create a business for yourself inside of the financial markets. Reason number 13 is that selling options doesn't require a lot of capital. Most people have this point confused. They think you need hundreds of thousands of dollars so that you can open up naked option positions, but that's just not the case. Most brokers will give you options level 3 and allow you to trade defined risk option vertical spreads on any stock that offers them. That means that if you have $100, you can start selling options right now. Reason number 14 is that selling options can actually be less risky than the buy and hold strategy. Advanced option selling techniques like the wheel or vertical spreads can actually lower your risk and be a safer way to invest in the financial markets. Selling covered calls or selling cash secured puts is actually a very low risk investment strategy if you know what you're doing. The point is to understand the mechanics of option selling and to be able to create those low risk investment opportunities for yourself. Reason number 15 is that option selling is not picking up pennies in front of a steamroller. Most people have the misguided interpretation that option selling is making a very small amount of money on the reward side, but facing a tremendous amount of risk. This simply isn't true. You cannot answer the risk-reward question if you don't know the probability of you hitting that risk or hitting the reward. Although you might pick up less money than you are in fact eligible to lose, you have a much higher probability of profit on each and every one of those trades. So if you deploy it correctly, you're going to make a lot more money and be more profitable selling options than buying them. Reason number 16, option selling is actually very easy and very liquid to get in and out of your trades. You don't need to wait till expiration. You can still day trade short option positions, swing trade, ride the momentum, or deploy any of your existing equity-based day trading strategies on the option selling market. If you found this content helpful, please like this video, subscribe to the channel, and leave a comment so I can help answer your option selling questions in the thread below. If you want more information on option selling, join our free Discord where we're helping option traders make the leap from losing money on option buying to making money on option selling. I hope to see you in the Discord, and thank you very much for watching.